Hello, Warriors. Good PCE day to everybody. Thought I'd say hello to everyone. How's everyone doing? Hope, hope on a Bitcoin shirt. Hope that 75K might hold the end of 4, and we're off to the races, which means, other things might get some buying interest. Anyway, hi, Scott, Michael, Bran, how are you? I'll try. K-Man, Ryan's here, the whole house. Andrew, Blake's here, James, Galaxy, Richard Baker. Welcome to Face. Marcus, Lowell, long time. Yeah, you're still addicted. Okay, it's good to know that you're still an action junkie. Hey, Blake's here. So let's go to work before the PC, try and get you prepped. What a day, what a week. Things can change in the New York minute. Really, when you think about it, this whole sell-off in the market started on Friday. So what a week. It does nothing, distributes for weeks and months, and then one day in the New York minute, everything can change. So I featured this descending triangle yesterday, said that it morphed into it after a false breakout. We have a breakdown. So you can't be long unless we start getting back above minimum 59.20. Tech 101, old support becomes new resistance. All right. And that's just, if you want to see an example of that, check out gold. So this 29.20 level, look how far back it went. All right. 29.20, 29.20, 29.20. You get the breakdown. And on this night, it went right to that level, 29.20.66. So that's $60 from here. So don't forget that with your levels, that just like support turns into resistance, resistance can turn into support. Okay, that's a lesson for the day, and getting some follow through there in gold. And yen is putting in a decent day. I talked about that, and the dollar actually caught both of them. So yesterday, the yen was less impressive. And we talked about this 48.5 level yesterday, in fact, saying, what a level for it to hold, because that black line it hit goes back quite a ways, right? So here it is. Here it is. Big level, once we got above it. So perfect area for it to try and give us a little bit of a bounce. We'll see. I think people are pretty much one way because of yields. Okay, so I just want to show one thing in yields, and then for food for thought yesterday with the market getting attacked. This is the week. But yesterday, you really didn't get a big flight to bonds, and that was a pretty serious sell-off. So let's see what the PCE delivers. I just wasn't impressed with how bonds acted yesterday. But if I want to be a bull, I could say, hey, we have a breakaway gap. So 85 to 90 measures 95, which is a pretty important area. So I think this news is more decisive for what happens to yields than probably anything else. And also, even though I was bearish to gold at the top, it's held up the best. I think you could look to be a buyer soon. Silver, if you're a silver buyer, I think there's a chance for this. But if you're a silver bull, this 30-50 level, maybe next week, could be an important level to hold. Look at all the confluence there. All right, so look, we're holding that. But on the daily, you have all those moving averages converging at that 30.5 levels, probably a fib. I didn't do the measurements on that. And the gold silver ratio Might have one more pop in it. It came off pretty good from 93, but we'll see. I think that what happens, I'm thinking about this, Blake. I want your opinion. So, we talked about that Trump was serious, that he was really going to do it. So it took, a week ago, the market started realizing it. And for sure, yesterday, could this be just like in stocks when you're going to have good earnings, you buy the rumor, sell the fact, and that we're going to have tariffs and the market sells off into the announcement and it's a sell the rumor, buy the fact on this from a trading perspective? Uh,
And good morning, everybody,
uh,
and good morning, Coach. I don't know because I think the market has really kind of been dismissive of President Trump and the Trump administration and just dismissing everything as far as tariffs go, that it's just not going to happen. It's just been a negotiating tactic. Yes, the market's gotten a little scared the last couple of days, but I think the scare is mostly growth scare. You look at,
okay.
like some stocks and companies
Yeah.
and you see the employment data and everybody's like, okay, maybe that's just growth, but what happens if you tack tariffs on top of that and it really starts going through with that extra 10% on China and with Mexico and Canada? I you know I'm I don't- I think the market will take a spanking, at
Yeah.
least initially, and you might get a few days of the market really taking it kind of hard, and then we're going to find some recovery because people will say, well, that's step one. The tariffs, he can walk those back now that if countries can not fight them, like let's say, Mexico. I think Ryan, you posted something in the chat room yesterday about Mexico wanting to implement a drug czar, and if he gets countries to do what he wants them to do, maybe the market stabilizes in hopes that that happens. I
Yeah.
don't know, but I don't know if it's going to be a buy the rumors, sell the news. I think it's just going to be tariffs are in. We might actually get a little bit more selling. So,
Well, yeah, you know what? This measured this breakdown to 5,700, and I just noticed that's a big level, 5,700. If you look left, right? Yeah, breakout here, held the breakout test here. 58 was 57, 58 was a big number. I could probably even look further left, but that's going to be important. Um,
but
so,
Coach, we're on channel support right now. Like yesterday's lows were channel support. Like just connect all those lows from that last big low on your blue line there in the middle of your chart. Just connect the lows from there. So
not this uptrend,
no,
a
no,
steeper
but
one.
right in the middle, yeah, right there at that
There?
low. Yep, connect all those, and you're gonna get right to um, it's a big channel support. I mean, it's a
Okay.
channel. So
Okay. All
yeah.
right. I believe
So
you.
I do think that today's lows are pretty important, and the thing that's going to push us right below that is a hot PCE
Yeah.
number, and that's not what the market's expecting. The market is expecting PCE to be relatively stable, if not come off a little bit. So,
Thanks, Blake.
yep.
And I think I'll go to Kay. Kay, I'm getting some divergences in Euro Pound. I'm wondering what you're thinking. It's
Uh,
still lousy weak, but if you just look at the
yeah.
4-hour chart, you see
Mm,
how the RSI this time at lower lows diverged from here.
Good morning, Dale. Good morning, everybody.
Morning, morning came in.
Well, yeah, it can. I was just looking at it this morning as well. Small battles in between here. I see your diversions, what you're saying. On the other hand, I just think that thanks to Starmer's visit to Trump, Trump gave him a little tap on the head saying good doggy, good doggy. So maybe. just maybe sterling is going to keep its big tone on dips. I don't know what's going to happen today for the month end or so, but I've reduced my shorts on the way down as I updated live in the chat room. So I'm running a smaller one, but I rather will try to protect that smaller one until I know what's happening. If we get a bounce back, let's say 82 three quarter for a starter, but especially 83 or so. If it goes
Yeah.
back up there, look at the reaction. It's I'm trying just to keep in it because I've been in it for quite a long while, right? Stepped out, then back in. Um, just continuing my exercise. You know what I mean? Just
Yeah.
see 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 if I'm still correct. And so for now, I mean, yeah, I'm just letting those little fights go on and see where we end up, and perhaps also, see what happens next week again, because we are at the end of the month, a Friday.
Yeah.
A lot of things can change start of next week.
Okay. Pretty low beta in euro pound for a while. So
Hmm.
I called ARP yesterday. That's the Association of Retired People here in
Yeah,
America. They said that it's okay if you're a senior citizen to
to
stick
do
to
Euro sterling.
stick to euro pound.
Yeah, I
It's
mean
the
it's
right.
an old man's trade. We're getting slowly a bit older. They'll
Yeah.
need to
Oh,
take
yeah. I
take
know,
position
bro.
in stuff that doesn't go that
I'll
doesn't
do a
protect
mic.
cost.
They said do micro lots in euro pound. Anyway, I want to bring Ryan in. So
Hey,
Ryan,
you,
hey
you sharing
buddy,
some of
how?
that? You sharing some of
Huh?
that booze with us? What was that you're drinking? You sharing it with us? You bought us all a bit of booze?
No, it's bottled water, buddy.
Yeah,
So
5 vodka.
yeah,
That'll
but
test that.
if anything, it'd be a Bloody Mary. It's 512 here. So what do you think? U.S.
Oh,
dollar
I think
yen.
dollar yen.
Yeah,
We're up, aren't we? We're knocking on that.
yeah,
It's a little bit of a zone 50.70 up to 150.95. That break point
yeah,
that we had. It was support back early February, as you can see there. Those two little candles you've got.
yeah,
So this is a bit of a test. We've had a low put in per se around that 149.80s. Couldn't get through your 60s line there. So, got a bit of support there now. But every rally so far this year, the sellers have come in and hit it. So is this bounce a bit of end of month? Is it the tariff threat? We'll have to wait and see. But every rally they've sold it. So we're either going to
right.
break back up, and then if we get above this 151 level, it'd probably be 152s not
Yeah,
long after, and that's a pretty big level on its own. I can see sellers coming in there, but
yeah. And what a big level it held. I mean, it's a 1,000 pip range, right, from the highs we made here. What was it? Yeah,
yeah,
58, 48. Gives you 38 on a breakdown.
yeah,
Back down, or back down to then we have this major support level. So I think you could be right. We're forming a still lower low. Maybe we get a pop because everyone's pretty unanimous on rates, and we'll see. Today's a real important day for yields. Yields are the bull case for yields is rapidly dissipating. So,
yeah.
but we'll see.
And dollar
Starting
yen's moving. Those yields aren't
without it.
bouncing at
Yeah.
all, and yeah, dollar yen's going without it.
Unless the yen is a tell that we're going to get a pop here. We have to recapture 430, I think. But I wouldn't be when I look at this chart. What I wouldn't be short.
Yeah. But
Okay.
there is a heavy hint of end of month stuff going on. I mean, Kay's been pointing it out, and
Yeah.
with euro yen, I think that's been doing a lot of driving this week. It's been driving dollar yen, it's been driving euro dollar, and that seems to be that there's a lot of end of month flows going through euro yen. So we're always waiting to get over another hump, and the end of month is another hump, and then you want to see how things settle as
Okay.
to whether this rally in yen pairs is real or if we're going to keep the trend going.
Yeah. Nvidia. So Grega got two of the three moves right, and he got the rally right? And that it was going to pull back from the gap. But to me, this is too deep. It had to hold this. Nvidia is going to break down, okay? And the moves are pretty huge, and there's a lot of space under this 110 level. Look at the weekly. So, this, unless it digs its heels in, well, the AI trade might be the thing that really, takes us down to 5,700. That is an ugly weekly candle that's about to take out the 50 week. So, hard to
We,
be.
we
Go ahead.
I was going to say we're going to have to nickname Gregor Meatloaf then, because if he got 2 out of 3, ain't bad.
Oh yeah, that's right. Good song. Good song. All right, you're a rocker. That. Yeah. Anyway, so I wore that Bitcoin Hope shirt that Neil gave me because we're not that far from reaching objectives. Blake said 75. We could be an opening away next week. Better hold it. I mean, basically it's all one market, right, Ryan? I tweeted that.
Yeah.
Gold, S&Ps, gold's held up the best. It's still a champion in my view. But the equities and gold went up together. They're going down together. Just a matter of degrees. Dollar popped, so it still seems to be all one market. Not much differentiation at all. Um, what's your thoughts on that? Still one market, or are we going to start to distinguish the difference between asset classes?
I think we're going to stay one market for a while until while we're in the midst of all this tariff stuff. As Blake was saying, people want to know: is it going to come? Is it not going to come? Is it going to be a deal? Is it not going to be a deal? If tariffs come, then we move on to the next thing. If everyone gets a deal done, we move on to the next thing. But we've got this deadline next week. We've got the April deadline and everything that goes on in between. So I don't see markets really changing how they're going to trade between now and those April deadlines and any headlines we get. We've got the ECB next week, so we'll focus on that for 10 minutes. Obviously, NFP, big data week as well, ISM. So we will switch temporarily to watching the data next week. But as soon as the data points passed, 5 minutes later, we're back to seeing whether Trump's tweeting on the toilet again.
Okay, we got a little pop in WTI. Nothing great. Still think we're headed towards this level, but we could bounce first as long as we stay under 75. But there was a scalp there with really no divergence. So
yeah,
this is not the low, guys, in crude. Even if we rally it up to 72 for a flat or something like that.
That's going to be a real big level. That 66, 67 in WTI.
Yeah, it is.
That goes back years. And there's a bit of a safety net around 61, 80, 62.
Yeah.
But if that goes, then who knows where this thing will go.
Yeah, that's where I was thinking of trying it at 62. So
Yeah.
we'll see. I don't want to bum people out, but I was talking to Jim and I for a long time, talked every day about the markets. Okay. And he made a point. I talked to him yesterday. He said, there was an article about Iran and their enrichment, and they've gone from, I don't know, 60 up to 60% or 70%. So they're close. Okay. And, it's, I think, a question of not if, but when they
I
hit
thought there
Iran.
was a headline. I don't know if it's WSJ or whoever saying that they've got enough for six weapons.
Wow. Okay. So, that's even, I just don't think they're going to let that stand pat. So, that'll be the next major event, I think. I think maybe it happens this month in March. Anyway, lots of things to think about. The important thing is don't trade with hope, and be hopeful in your life, but not in the markets. Okay. So, and the markets will try and dash your hope in life. So at times, don't lose that hope.
Yeah.
And with that being
Hope ain't a
said,
strategy.
and you know, why don't you guys go around the horn and talk about how you're going to prep for this number? And you know, we have a great guest for this number. We have Jamie's here with us from Reuters, and this is his wheelhouse. So we'll be talking about inflation. We'll be talking about the Fed, and we'll be talking tariffs and see what Jamie thinks about this too. Uh, I'm
I
going to
was going to
make you.
say, having Jamie here, he's been around the horn a few times, and
Oh yeah,
he's been through the Trump administration, and reported a lot with Reuters. So it's going to be interesting to hear his take on how he's feeling about
yeah.
about
He enjoys coming here. He looks forward to it. So
uh,
we have people that enjoy coming here and sharing their insights, which, like you said, they had to go around the horn a few times to get good.
yeah.
And so anyway, it's going to be a great interview. So
It
go
is.
take it.
Yeah, let's talk a little bit about, expectations for today and, what can happen. Whoops, that's not what I want to do. Let's go over to the calendar here just so everybody can see, where, the market's looking for. So you can see like the PCE month over month, market's looking for a little tick up, but over year, remember PCEs, it's all about a drop off. It's a 12-month drop off. So when you knock out like last, you know, 12 months ago, you take out that 1 month that was, inflation was pretty hot and we were coming down. It's bringing all the numbers down. That's why, we're going from 2.8 to 2.6. So that's what the expectations are. But the risk is the month over month data that it's now, now showing some signs of life. And that's what I think people are going to be looking for. Personal spending is supposed to be coming down too. That makes sense, especially when so much income is being, spent on eggs now, just
Yeah.
eggs. But the eggflation is real. But so, personal
Oh,
spending
you
and
know what? I
other,
have a question.
yeah.
How come only egg prices went up and the thing that makes them didn't go up?
I don't
Chickens.
know, because when you cook a chicken and you throw it on a grill, you kill all the bird flu. I don't know, Dale. I don't. Your
I
question
mean,
is,
isn't that
I
kind
have
of
no
weird?
idea.
All right,
It
anyway.
is weird. I
But
know it's a 6-month cycle. It's like 6 to 8 months or something before you can get a new batch of egg.
What
I don't
came
know.
first? What came first, the chicken or the egg?
Yeah, right. There you go. I don't know. Hey, let's talk markets though, because I was really hoping that the euro overnight was going to trade down towards this 103.30. We have found some stabilization, but I guess I'll start with Ryan. Ryan, how are you going to trade the PCE today? I mean, especially with dollar yen flirting with the 151 level. I'm looking at some pretty hot data coming in, so I think the dollar yen can trade 151, maybe a little bit higher. On hot data, on weak data, the dollar yen is going to slip right back below here. But, what are you going to do with the euro, sterling, anything else? What are you thinking?
Well, euros looks a bit glued because we got I think upwards of 6 billion rolling off between 103.80 and 104.10. So that's stuck in a rut for the moment.
And just so everybody knows, if you guys want to, this is the best place to get where options expirations are. Ryan combs through the data every day and gives you exactly where, the big numbers are going to be, through on the big expiries. So tell us a little bit about these that we can see here.
Yeah, so it's I look at the options because you don't know who's doing what. So you don't know whether they're calls, puts, and when they were put on, why they were put on, anything like that. But what you look for is we're coming into big data. Euro dollar hasn't moved all morning. We're seeing other pairs moving. So when you get to the expiry time, you look at what everything else is doing. If the dollar's really strong, but euro's not dropping in alongside everything else, then that's the options, and then you can potentially look for a catch-up trade, if you like. So use it to see if it pushes the market out of sync with whatever else is going on for that day. And the same thing with dollar yen over over the PCE. You know, dollar yen's looking fairly bullish right now. So if we get a soft number and you see a dip, well, if all this buying is last minute month end, you're probably going to see a bit of a reversal coming after the data.
Right. Okay. And so, you know, these options are really, you know, really important. Like they especially these big expiries, they kind of act like magnets. And, you know, Ryan was saying yesterday evening, evening my time, nighttime his time. He's like, hey, watch these Euro options at the 104 level. They're big and chunky. You know, it's like, okay, if I'm short the Euro last night at 103.70, I'm thinking, wait a second, Ryan just said, you know, that we could really be drifting higher towards that magnet around the 104, and here we are, 104.10. You know, those are things that as traders, if you're not in the Forex analytics community using the tools that we have here, and you know, and focusing on the levels that are really critical around the market and understanding why we're where we're at, that's why you jump in the chat room and have conversations with us. This is the Forex Analytics chat room. And we have in-depth conversations about why certain levels are being tested and why we're there. And this is where you can talk to K-Man, myself, Ryan, and so many other great traders in the market and see what everybody else is thinking. So anyway, enough about that. But Ryan, how are you gonna play? I didn't mean to step on you there. How are you gonna play the market though today?
Yeah, I think as just mentioned, I'll keep an eye on dollar yen. If it's a soft PCE number, then I think any dip might get bought up. So if it's a decent one, I might have a look at that. Like you and Kay, I'm still playing dollar mex shorts because I'm liking the fact that Mexico is more likely to get a deal than perhaps Canada. That's still a bit 50-50. So I'm happy to sell rips in that one if we get it, as long as it's not massively bad news.
All right. K-Man, what are you thinking today?
What am I thinking?
And good morning.
Good morning, Blake. I'm really, as I said earlier in the week, I'm trying to find perhaps the inflection point where more tariffs and and lower stocks are finally perhaps going to have an inverse effect on the dollar. But yeah, for the time being, I'm traveling extremely light, Blake. Yeah, I'm going to trade as a reaction to data more than front running them or trying to figure out. I no. Give me a really good rally up to 152 or so dollar yen, then I may try a short, but for the rest.
And that 152 level has been a huge pivot as we've been discussing. It's a multi-year pivotal level for the dollar yen. So yeah, I mean, if we stretch all the way up there, you're getting towards channel resistance, which makes complete sense.
And also, there's the weekly cloud lies between 151 and 152, and it's very thin. So there could be quite a lot of activity starting next week or so on the back of it. Let's see. The Japanese are watching it.
Got it. All right. Well, thank you, K-Man. Hey, I'm going to get ready for the data, but Dale, as I'm getting ready, what are you thinking today?
Well, I did, get long the dollar at the divergence at the low and the yen, and I booked half and I had BE stops. I'm looking more at for a little while to be buying dollar weakness. So, if we have a sell off on a weaker number, I would, sell euro, sell cables a little weaker today. Aussie, I think, could get down into the low 61s. I thought it was going to be, mid 62. So I still think there's at least 107.50 in the Dixie. That's a real key area, 107 and a half, 108. And if we get through that, yeah, I think we're looking at the 109 level again.
Got it. I'm really looking to sell the dollar yen myself. We trade 151. I'm looking to get on the short side. I actually was just trying to nibble around short this morning. I just closed it out, and I'm putting it in the trades room, matter of fact. And I
There's the
see Steve
numbers.
here. Steve, oh, the data's out. Shoot.
Canada's GDP lower. PCE in line.
Yeah, we're not.
Is
You
that
guys
what they
see
were
it?
looking for? I saw 0.3. It's right
Point
there.
three.
Yeah,
So
0.3 as expected, 2.5 year on year. The core 2.6 as expected. Personal income better, but the spending a little worse. Oh, ball back in the middle, I say.
yeah, the dollar yen just, or excuse me, dollar yen, dollar index is just kind of floating around. Yields didn't do much. They popped a little bit and came right back down. S&P's
They're trying.
recovering a little. Yeah, it's coming back a little bit because it could have been worse. I think that's probably what the market's thinking. It could have been worse. And no, here's the other thing. And I know we're going to bring in Jamie. I want to point this out because Dale, you'd mentioned it, and I was trying to walk you through it. But let's just go over. Let me just pull over to the S&P really fast. I got to show you guys two charts. So the S&P. All right, here we go. So here's the S&P. This is that big channel support that we got to be focused on, right? Big channel support here, right there,
Wow. Okay.
right?
Oh, yeah.
Yeah, that's a big one in my opinion. But
It
what's
is.
also big is Bitcoin is trading below the 200 DMA right now. And I know we're targeting, 75,000. Everybody's going to trade from that level. We get to 75,000, everybody's buying it. I'm just going to tell you, you're going to get a bounce there. And if there's no bounce there, Bitcoin will probably see 50,000 before anything else.
How
I'm just
about if
saying,
we don't get there
yeah,
and they're turning
well,
today too? That
we
could happen.
we could. I mean, maybe today. I mean, maybe we just kind of float around here for the next week. I'm just saying being below the 200 DMA is not, it's not a great thing if you're a bull. And like I said, the reaction area is going to be 75,000. There, I mean, I've been planning on buying there for I can't tell you how long.
About a year.
And I'm sure everybody is, you know what I mean?
Yeah.
So I would expect a reaction from there. But just watch the S&P. It is Friday. There's a lot of risks over the weekend. You know where channel support is. Yeah, we're getting a bit of a recovery right now, but everybody also knows what's happening over the weekend and the risks that are around. So keep that in mind. All right, guys, I'm gonna pass it back over, back it over to Dale. Make sure you check out ForexAnalytix. Check out the trader funding program because it is, with volatility, that's the place where you want to be, is being able to leverage up your money and trade other people's money. So check out the trader funding program on forexanalytix.com. All right, Dale, it's all yours.
All right. All
Thanks,
right,
thanks,
buddy.
guys.
All right. So thanks, Blake and Ryan and Kay all week. Good job, guys. I don't think a lot of people got hurt. We weren't saying, get aggressively long the market. I think we've been cautious in here for a while, even when it was unpopular, and that was only a few weeks ago. So it's great to have Jamie here. Jamie, welcome back to F.A.C.E. How are you, buddy?
Hey Dale, good morning. How are you?
Good
I'm well,
morning, bro.
thanks.
Things are okay. I think it's a great time to have you here. Um, why don't we start with tariffs? Because they're going to start Monday. What are your thoughts on how it may impact the economy? Uh, are inflation rates going to go up? And is there a chance that besides the markets being weak, that after this growth scare, that the Fed might be forced to tighten?
Well, who would have thunk it? I mean, it was only a few weeks ago we were, we're looking at rate cuts, a heavy dose of continued easing after a pause. Then we were back into the sort of stay on hold, pause territory. Now we had a couple of Fed officials yesterday. Harker, I think, was one of them, and Schmid, Fed officials saying that the Fed can move in either direction, up or down, and that they're less convinced by the slowing in inflation. So we've had kind of mixed signals from the Fed. Powell's still very much in the camp that policy remains meaningfully restrictive. I think that's the kind of catchphrase right now, is meaningfully restrictive. So it depends where Fed officials fall on either side of that. If they think policy is meaningfully restrictive or less or more, that gives you an indication of the way they're thinking.
Yeah,
To be
it's
honest,
kind of a minority narrative now that rates are going to head up again. I think
it's very much minority, and it has been. And I mean, let's get this clear: it has been a minority view, but that minority was sort of expanding and shrinking as some of the data came in. I think we're getting mixed signals from Fed officials because we're getting mixed signals on the data. Look at the consumer confidence taking an absolute plunge. Some of the activity indicators, PMIs, ISM, are really starting to sort of flash, if not red, and certainly amber. And the claims data from yesterday, that may be DC related or driven, but claims are starting to spike up as well. So there are reasons to be cautious on the economic front. And so you're talking about maybe the Fed's next move might be a hike. There's an equally cogent case to make that recession risks are now on the rise again, albeit from a very low level. So it's very much a mixed bag, and a lot of uncertainty. There always is, but it feels like especially so now, given the political environment and, as you're saying there, the outlook for tariffs, which, I think, let's be honest, if you're an investor with a 3-month plus horizon on a business, which your horizon will be that and more, your visibility is next to zero.
Yeah. I've heard that, until it's clarified, which, there's always tweaks and changes and reversals. And I think that we'll see it Monday. But even though we have that Monday, there'll still be, I still think there'll be negotiations going on even after tariffs are in effect. Maybe they have to be in effect for a while for things to change or they accelerate. But
No doubt.
I'm looking.
I think you're spot on there. I think you're spot on. There will be negotiations. There'll be constant negotiations, and I wouldn't be surprised if we get something on Sunday evening saying tariffs are on hold for another month while we continue talks. Nothing's off the table.
Yeah, that's what makes it hard to be a position trader. It's really difficult. But we've had let's talk about the potential of recession, and let's go to Walmart's warnings that they're expanding market share with the affluent, which means to me that even the people that are loaded with assets and real estate are starting to watch their dollars.
What's their pennies or their cents? Yeah. That's another one actually. That was a big one. That was a big, as I say, if not a red flag, certainly an amber flashlight that flashed from the Walmart earnings. Where maybe you might think where Walmart goes, the economy goes. Not Ford anymore, is it? But it's Nvidia or Walmart.
Yeah. So and their credit cards are pretty maxed out. Majority of the lower 60% of consumers.
Although I don't know if you saw, I think it was last week or certainly earlier this week, Moody's Analytics and Mark Zandi, the economist there, he had a piece that that traveled quite well and got quite a lot of play, just noting that 50%, around half of all US consumer spending, is now accounted for by the top 10%. And that's a record.
Wow. Okay.
So that disparity has been growing, but it's now the top 10% of earners account for all of half of all consumer spending. So if they start to retrench, as you're saying, maybe watch their pennies and their dollars, and certainly if the stock market continues to head south, they will be watching their spending much more closely, then consumer spending could be in for a bit of a rocky ride. And again, especially as I just mentioned there, the latest consumer confidence numbers, they took a bath, and I think it's to do with uncertainty around tariffs and maybe some of the hiring and firing on government payrolls. Well, more firing than hiring, obviously. But so the uncertainty levels are high, and I think that's seeping into the survey data, and it might not be long until it seeps into the spending and hard data.
So besides trying to manage inflation and employment, all of these changes in policy make it even more difficult for the Fed to make decisions, correct?
Absolutely. And I think Powell himself has said that, and he's been quite clear that I think that's part of the reason they were on that they started their pause. It was because of the high levels of uncertainty. And that kind of makes sense. But if you zoom out a little bit, I suppose the uncertainty is high, the day-to-day noise is loud, certainly. But you just mentioned unemployment and inflation there. Inflation today, we just saw, came in at what, 2.5% on an annual basis?
Yeah.
That's not bad, I think, but in anyone's book, 2.5% is reasonably close to target. And unemployment, where are we? 4.1, 4.0? Again, in anyone's book, that's not too bad. That's not to suggest that things are rosy and everything's going to stay that way for, into the future. But right now, I suppose on a very broad macro level, things are reasonably stable. However, not without rising risks.
You know, a lot of people are having a hard time finding jobs. I've heard this jobs market described as a frozen jobs market. So, people are sending out hundreds of resumes. A lot of them are to, the companies advertising they need help to show that they're busy. It's more of a PR thing than them really looking for people. And because of the great resignation fears are still there. So they have fear of letting people go. But as far as getting a new job, it's a struggle out there for everyone. I guess.
Well, if that's the case, that should definitely start to show up in the hard data. As I say, claims are starting to creep up. I think the jobless claims are the highest since October, if I'm not mistaken. That's pre-election, obviously. The JOLTS numbers should start to show that as well. And of course, do we have payrolls next week? I think next week we have payrolls.
We do.
They may not capture the latest wave, but they might just give an indication that that ball is starting to roll. So yeah, if unemployment starts to rise, there's no question, and I think last time I was on a few months ago, we spoke about it. The Fed was looking more at unemployment than inflation as its sort of lodestar, if you like, as guiding light for where to go on rates. And I think if we start to see the labour market creak, given the sort of nervous economic backdrop, then I think we could see the Fed maybe start to ease again.
April? What meeting do you think they'll make that move?
Well, where are we looking at? We're looking at June, July, if you go by SOFR and rates futures. But that's been coming in a bit, hasn't it? I think only a few weeks ago, or about a month ago, we were looking at September for them to start the rate cuts again. So we're now coming back bit by bit. July, now it's June. And I was just looking before I came on at the curve going into next year, and we're looking at almost 3 quarter-point cuts by this time next year. So 50 by the end of this year, and maybe another one in the first quarter of next year. So that kind of anticipation for more easing is starting to build again. Certainly. I saw some people on Twitter the other day saying that the Fed could come in with QE if recession fears really start to take hold and unemployment spikes. They could do QE in the next few months. I think steps like that are quite that would be quite dramatic, and I wouldn't expect that. But certainly a rate cut in April is not off the table.
Okay, well, let me ask you this. What are your impressions? This happened quick. Really, it started Friday. Okay, so really in a week, look at what's happening in
is this the S&P?
Yeah, and the NASDAQ, and is the AI trade dead? We had NVIDIA earnings, and it looks like, it's in trouble.
NVIDIA.
Here we go.
I think what was the share price fall yesterday? I think it was about 8%. NVIDIA fell.
There's a picture. Yeah.
Doesn't look
So
great, I
this
suppose.
this
Close to
was the
support, looks like.
yeah, this is the earnings candle. Okay, where we were all over the board, and then the failure with the rest of the market. Yeah,
Mm-hmm.
I mean it could bounce, but I
Mm-hmm.
think it's not healthy that it's all the way back at that support zone. Reminds me what the S&P said. If you test support too many times, Jamie, it's like putting your shoulder into a door, and it
Mm-hmm. It's
may
going to
not
go.
break.
It's going to give at some point.
Yeah. You have to maybe hit the door 3 times, like S&Ps 5920 held, 5920 held,
Mm.
5920 held.
And
Eventually,
then it didn't.
the door breaks. Same with Bitcoin. 92 held and held and held. And I want your impression on Bitcoin because there was a lot of fanfare about having a president, probably the first president that I can remember in my lifetime, endorse an asset class. And so here's the same thing when you knock on the door. This took several attempts to break down.
What
But
is Bitcoin now down about 25% from its peak? Is that
yeah,
right? I heard
yeah,
that.
yeah,
I mean, that's a big move in anyone's book, but
yeah,
maybe not so much for Bitcoin. We're kind of used to some of these big price moves, aren't we? And I
yeah.
think
It might
Blake
be a
was saying earlier
buy.
that it could be. Yep.
Yeah, it might be a buy. You have a view on the dollar? We have ECB next week.
Well, just going back to the equity market, I think we're
Okay.
at a very delicate juncture, as you say. We seem to
Yeah.
have broken short-term support, and it seems to be led by tech, AI. I mean, not only in Nvidia, their shares are taking a bit of a bath, but again, I was looking just before I came on Tesla.
Yeah.
Tesla's down more than 20%, nearly 25% in a week. Now, I know it was maybe overstretched and overvalued. For various reasons, it was trading very, very high. But talk about big moves like that, and it's taking down the Nasdaq. The Nasdaq's down 5% for the year in the red. This seems to be gathering momentum, and the broader market is being held up by rotation plays and moves into other
Right.
sectors. Like the Dow,
Right.
for example, is hold up. The Dow's probably around about flat for the year. But as you say, if you bang on the door often enough, it will start to give. And I think if this tech sell-off continues, and there's still a lot of potential for it to continue, given how much it rallied in the last couple of years. Nvidia, for example, I think Nvidia shares are up in the last 5 years about 1,800%.
Yeah.
So
You're right. Yeah.
that's been justified by strong earnings, no question. But there's only that growth in earnings and that margin that just can't last. And I think the reaction to this week's earnings shows that despite reasonably good numbers and a reasonably decent outlook, I think fatigue is certainly starting to set in there. So, I mean, could the equity market fall continue? I think it might do, and if that does happen, the yields continue to fall, and maybe the dollar starts to come off even more because the dollar, as you were saying earlier, it's still pretty punchy on a broad level.
Yeah. Yeah. So
And
it's
there's room for the euro, for example, to maybe pick itself up because only a few weeks ago, a couple of months ago, we were talking about maybe 3, 4, 5 ECB cuts to come and recession in the eurozone. But now we're getting more defence spending in Germany and the rest of Europe,
right.
maybe a peace deal in Ukraine, and so that's kind of lifted the euro up away from parity. And if the ECB doesn't cut as much as expected, and we've had ECB officials saying in the last few weeks that policy is probably maybe more balanced, not quite as restrictive as they thought it might have been, then yeah, I think there may be a bit more upside for the euro. In fact, some of the big banks on Wall Street are starting to revise their calls for the euro. Those parity calls are starting to melt away a bit, I think.
Okay. Well, that makes me want to be short till I hear parity calls again. But
If
so,
the
and
consensus is saying go long, then maybe
yeah,
the short-term trade is to go on
I'm
the other
I'm
side.
because I'm bearish a dollar, but this is a minimum of correction. But if we start getting over 108, then there's something else going on, and the euro can hold here or even retest, go back near the lows around 102, and this is just continuing to base build. So a
The dollar
lot's
is,
going to have to
by
do
any
with
measure,
risk.
I
Yeah.
think by any measure, the dollar is, again, on a broader perspective, not just on an intraday, but on a wider perspective, on a time horizon, the dollar is pretty punchy. On a nominal effective exchange rate, real effective exchange rate, all these kind of measures, the dollar is strongest in decades on a real effective exchange rate. And we've heard, Treasury Secretary Bessent and Trump give his signals that, I mean, they clearly want the dollar lower.
Right.
And that's despite the lip service to strong dollar, etc. And they clearly want the dollar lower to boost domestic manufacturing, etc., etc.
Right.
So, does the market take it there, or is the market forced to take it there? I think we may be in for a period of, if not weakness, and certainly sort of not much more upside than in the dollar, if the Treasury gets its way.
Yeah, well, I still say, I'll be trying it up here for a short. We'll see, but we get over 106.70, something else is going on. I think it's mainly going to be influenced by risk. I think that was part of the move in the dollar yesterday, was risk off. So the surprise.
Look where the 2-year yield is. The 2-year Treasury yield is now down to 4.05%. It's getting down to
All right.
4%.
So let's talk about that we're reinverting. What does that mean to you? Second time.
Well, it's a classic sort of slowdown / recession signal, isn't it?
Yeah.
If they get that, doesn't really matter if it's a bear driven by a sort of bear move or a bull move on the curve. But yeah, if the 10-year yield is coming down pretty sharpish, where are we in the 10-year? 4.25 now. It was only a few weeks ago, about a month ago, we were at 4.80, and top was a break above 5%. So these are pretty, consequential moves.
Yeah.
On the 10-year yield.
Yeah. So the question is this the beginning of? You think 10 years are going to head down towards under 4%, back towards 360?
Well, where would you put the next 25 bips move in treasuries from here? We're right on 4.25. Are we looking at 4% or 4.50? Do you think?
I'll go with. I'll go with 4.50.
4.50.
Yeah.
So that would require inflation to sort of not go much lower, to pick up, maybe for growth activity data to hold in and maybe pick up.
Yeah.
Yeah, it's reasonable. But I think it's equally reasonable that some of the numbers we're seeing, we get a few more of them, and we start to head down towards 4.
You put a gun to my head, and anyway, I have no position in here, but I wouldn't.
But that's very consequential for the dollar, isn't it?
Yeah, it really is. So that could be part of it. We get a pop in yields, and the dollar recovery continues for a while. We'll see.
Yeah.
The yen
and the yen is a fascinating one, isn't it? As always.
Look at that, Jamie. That 148 level. It goes. That level is held for. It's been very significant for months and months and months. They were starting to talk about where yields went on the JGBs, but what do you think? Most people are pretty negative on this pair, just like they're looking for rates to continue lower, and the yen is saying maybe something different, that maybe that's why the 10-year could pop to 450. What do you think?
Sorry, just before the end, there's a good point just came in on the chat about month-on-month inflation will drop because oil is down, and I think oil prices. I know we're in the digital tech AI age, but inflation is still driven to a large degree by energy prices. And oil has come down a lot in the last few weeks, and it's I don't have a chart in front of me, but it may be lower year on year as well, which feeds into inflation rates. So that's just worth keeping an eye on as well. The fact that oil prices have dropped. As for the yen, I think one of the most interesting notes I saw in the last few days or week or so was from Bank of America on dollar yen. They pointed out rightly that real yields and real rates in Japan are still deeply negative, especially policy rates, because inflation is now, I think headline inflation on a national basis is 4%. And with a policy rate of 0.5%, hey presto, doesn't take much to work out that the real policy rate is minus 3.5%. So your return in Japan is still deeply negative, and even though yields have spiked, 2 years and 10-year JGB yields are up again against 4% year-on-year inflation, then you're still getting a negative return on those bonds. So their point was, dollar yen is it may not be the sort of downward one-way path down that you might expect. In fact, they changed their forecast. They raised their dollar yen forecast for the end of the year to 165.
Wow.
So what do you think of that? 165 again, as we were, you guys were saying earlier, you have to get. It's the old high, isn't it? Is that not the old?
Yeah, I think. Well, yeah, 165, and that means rates. I'd have a hard time seeing, the yen do that. 165. Yeah, the high up here was 62. So they're talking about
breaking that. Yeah, breaking a new 35-year high, I think.
Wow. That's a contrarian call, isn't it?
I think it is, but it was an interesting one because they were basically highlighting the negative returns on Japanese bonds.
Okay.
So
Well,
then 165. It's a bold move.
All right. Well, if we're going to 165 in the yen, we're going to above 5% in the 10-year. It would be my guess, unless that correlation completely breaks down. And I don't think so.
Yeah, no, it's unlikely. It's unlikely, but I think the markets have thrown us a few curveballs in the last few weeks, months, and years, haven't they?
Yeah, give me a fastball down the middle. Can you do that, Jamie? Set it up for me. Anyway, Jamie, it's always great talking to you and getting your views. You straightened me out on a few things here today, and I want people to follow you because being in tune with the things that you say can help their narratives. And like today I was saying some things and you gave me the other side of the coin, and it makes people
think it's always good just to sort of be aware of what the other side of the argument is. We all have our views, we all have our biases, etc., and inclinations towards where we think things are going. But there's always another side. There's always another side of the trade, as you as a trader will know. But and behind that, there's always another argument.
Yeah, look at this. So Jamie puts out some nice charts, shows the breakdown in the Nikkei. So go to at Reuters Jamie and follow him. And if we go to Reuters, where would we? Is there any way for us to find your commentary or anything besides just here on X?
Just on the website, on the Reuters.com website, and I'm going to start posting as well on Blue Sky in the near future.
All right. Is it growing with what's happening with Musk?
I haven't started posting on it yet, but from what I can see in here, then yeah, it is it's certainly growing a following.
Okay. So now we even so there's Fox News and CNN, and now there's Twitter and Blue Sky.
There's everything. There's no shortage of platforms.
Everything's what team are you on? Anyway, the team I'm on is for everyone who hears my voice not to get hurt in the market, but realize that's a risk, and not to make the big mistake, and to be patient and look for trading opportunities with measured risk. So that's my mission. And you helped me accomplish it, Jamie, by coming in and giving us some stuff to mastermind with. I want to thank you, buddy.
I appreciate it. Thanks for that, and thanks for having me on, as always.
All right, Jamie.
Glad to be here.
I hope you have a great 2025. You and I will talk in May around my birthday. All right, buddy.
Looking forward to it. Have a good
All
one.
right.
Take care.
All right. Thank you, Jamie. Jamie McGeever, everybody. At Reuters, Jamie, guy sharp. Need to follow him. I hope everyone had a decent week. John Irving, I hope you have a great weekend. It will accelerate. Okay. We'll see. Okay, everyone. David Blaylock, new name. Everyone, listen. Do your work over the weekend so you're prepared to execute instead of analyzing on the fly. Because if you do that, you won't impulse trade, which is the enemy of the trader. And I'll say it one more time for those of you that are here. And you see my shirt and it says hope. Okay. Hope is the oxygen in our life and the carbon monoxide in our trading. And yeah, maybe I'll get a haircut this weekend. What do you think? Think I need one? Saloom? All right, everyone have a great weekend. Remember, don't just count your pips, count your blessings. People enjoyed you, Jamie, and we'll see everyone Monday. Thanks, Sinatra. I don't need a haircut? Okay, I'll leave it. All right. All right, my band and I will keep it long. See you later, guys. Adios.